Okay, let's just take a look at what's going on with these markets. Not intentionally wanting to start on this pound Aussie, so let's just concentrate on the euro for now. Yeah, I have to say I didn't expect that euro to get up to this point, but that's the beauty of these markets. You need to expect the unexpected. I did try one short just at this resistance level and got stopped. Yeah, I thought this level here might give way. So, but it didn't keep going. It's gone to this fib level up here. The fibs are taken from 2015 highs. Let me just double check this. Yeah, sorry, up here, aren't we? Yeah, that was Jan 1st, obviously bank holiday, and here was Jan 2nd. Yeah, and that's, yeah, so it's actually on the close of 31st December. We have the lows here on March 13, and here we are punching in here. Now this is a chart pattern. These three wave moves are very, very powerful. So not surprised to A, see it gap down to that point, and B, you know, if it's going to hold, it's going to hold well, and that's exactly what it's done. So would I trade this? I'm going to steer clear of this for now. Data-wise, we have a lot of UK data. Let me just go and grab that a minute. So we've had, well, that's the wrong Monday. Yeah, so this is today. So we've had weaker home sales in the US, slightly weaker mortgage approvals, and so on. Tomorrow, ooh, busy, very busy. German retail sales, that'll be interesting at the DAX open. UK current account, the UK final GDP quarter on quarter, looking for a better number on that one. And CAD GDP. Now, we've actually got a short week this week because we haven't got the US with us on Friday because they're sneaking off for their Independence weekend. Wednesday, Chinese manufacturing, so by the time we wake up on Wednesday morning, that should be interesting. We're looking for, Wednesday's going to be quite important for the pound because we've got manufacturing and Mr. Carney. We've actually got non-farm payroll this week before the US closes up for their long weekend. So we're looking for a good number on non-farm payroll to see if they can lift these markets. Okay, so in the meantime, let's have a look at the pound US. So we're seeing some dollar weakness here with all this, all these movements around here. So this is very bullish from the point of view that this thick EMA is the 20 EMA. The thinner is the 50 and the 200. So the 50 and 200 is crossed, but we are basically, although we're holding up, we are just range bound because it's not a very significant move to get us out of this range. Let me just move some of these little details there. So that's the fibs and the EMAs and the trend lines. So if we can go into tonight and hold 740, 750 overnight, bear in mind we're looking forward to some positive numbers on the pound over the next 2-3 days. This could start to hold up. On the face of it, it's a consolidation pattern, a bullish consolidation pattern. We've had 1, 2, 3, 4, 5, and a decent leg. So we had, in terms of actual legs up, we had 1, 2, 3 decent legs up. And here we are with an A-wave correction sitting on major support. RSI is still somewhat high though. We're just just narrowly above the midline. The MACD is divergent, so it's mixed signals. Not surprisingly, very mixed signals. So I would, if you be very cautious. I've been buying. I did a couple of longs on this one today. If you look at the weekly chart, at the moment, we are only just inside of last week's seller's bar. That black bar is a seller's bar. So we hit the 50% over the last 2 weeks, and now we're dropping back to the support. So with these moving averages sitting here, it actually looks as if we could do with a dip. And the daily chart is certainly struggling at these levels. So we'll look at we'll do a day to 15 trade tomorrow over the next couple of days. Well, if it's good tomorrow, obviously we'll hold for the rest of the day. Right, I will anyway. Otherwise, we will just stand aside and watch. 60-minute fibs. So you can see we have a very nice stepping up pattern. We held some key trend lines here. Crept up and up and up and up and up, and then just got too exhausted up here. That's your three-wave reversal here. You see three-wave reversals just about every day of the week. It's one of the most, it's a good fib number. It's just a very common occurrence. If the market has had enough, then watch out for a punch up into a resistance area for the short. At the moment, we're gonna, like I said, we're gonna have to hold 740, 750 to do well into the rest of the week. This 60-minute chart is so we're just clinging to the upside of the 200 EMA here on the 60-minute chart, and that has been curving up very nicely. But just by using these trend lines as guidelines, you can get a good idea. This 20 EMA is nice and tight, clearly defining the waves until we start closing underneath it here. And the reason why this is so bearish is because we hit resistance and we start putting in lower highs and lower lows. But just the difference between this and this is we got higher highs all the way up, higher highs, and suddenly we can't break that resistance, and we start making lower highs, dunk, 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 etc. So this is potentially a continuation of last week's selling. Potentially, certainly, nice support here, and a relatively small push up. I mean, there was 100 points in there if you were very patient and took it this morning. So interesting times. And where do I think that's going to go? Let's get back to the daily. I mean, the way in which the 20 EMA is holding up so well, I actually think we could, if we can hold around here at least into tomorrow, I think we could see a push up to 160. So my feeling is this market wants to go and touch 160, 162 up here on that fib level. And at the moment, over the last couple of days trading, that does warrant that, from the point of view that we have closed higher for 2 out of the last 3 days. This little bar down here is the Sunday range, so I'm just discounting that. It does have some influence on it. I mean, the fact that we opened on the Sunday and closed higher before the Monday opens, that has some bearing on it. So overall bullish, but the risk-reward ratio of the swing is certainly very, very limited, and in fact it's not very favourable, full stop. But you can see that there's quite a difference between that and the euro. I mean, despite the issues around the euro, that euro has had, it's pushed up into, if this was the euro, we'd be seeing a big bar like that. And the pound hasn't done that today. Now, whether or not the markets know something that we don't, well, we can't assume that, and just trade what you see. Let's hope they are buying these little dips, and enough people are going to hold this into tomorrow and Wednesday to give us a little move. Of course, I mean, close, it's such a narrow range, so if we close below this level here, it's toast. Right, moving on, let's stick with the pound yen. Wait till that's come through. It's a bit slow for some reason. So gap down in this market, as with a lot of other markets. Can't breach the 20 EMA as we go into the end, or towards the end of the US session. Would I short that? Yeah, this has been a very, very strong trending market up to now. Obviously it really hesitated at that 195, 196. Yeah, if the market likes the data tomorrow, that could just punch right back to 196. So on the basis that we've got a good looking Sunday open and a higher Monday open and close, I would stay out of it. I'm going to concentrate on the pound US for the data trade tomorrow, on the basis that it's all above the key moving averages, so it's potentially got a higher probability. So we've looked at the euro US, let's look at the euro yen. And yeah, like I was watching this closely last week, conscious that we were hitting that fib level. I should have been shorting that fib level, because this is, this area here, well, particularly that's the sort of 50% and the fib level around it is quite central, and so you can see that trouble is with this, it was bashing up against it for a lot of June and not doing much. It's bashing between this and the lower fib level, really range bound. So if you lose a little bit of concentration, then that's it, and that's my fault for not spotting that consolidation was probably coming to a close. 140 being such a massive number, that is a bit of a miss. I was shorting the euro US. I'll show you what I did on Friday on the euro US in terms of day trading, but I was shorting the euro US last week. I just didn't hold it into the weekend. I don't think many people held Euro and DAX into the weekend, not knowing what was going on. But you know, that's a mighty push to the upside to close that gap, and we haven't actually quite closed it. The actual gap fill is 840 if you go by Friday's close. So we are 23 points away from a gap fill. But that's a pretty impressive bounce. That's a very, very impressive bounce. Would I trade that? If we came back to that 135 and put in a good 60-minute bar, yes, I would. Would I short it? Yes, I would. If we did this, let's have a look. If we overshot the Friday close, which is there, overshot it and sold here, I would definitely short it. That'll be a terrific 922. You might want to mark that down. If that gets up to 922, bear in mind we're not, you know, above 750, with a very nice gentle pattern here. So we could get a hairball pattern up here to shoot it up, at which point I would definitely look to get a short up there. But I think one of the things I wanted to focus on today was these three-way moves, because they are so prevalent. They are, you know, we're seeing so many of them. This was a great one up there at 140.55, which is one of the reasons why I'm kicking myself for not taking it. Yeah, this actually set up at the end of the London session on the 22nd, and then we got a pullback. That's overnight, so that's why I missed it, because it's triggered as it's headed towards the Asian session, and by the time we got to our screens the next day, we were down here. That's why I missed it. So unless you were checking your screens late on the Monday, is that? I think, yeah, Monday. That's not much of an excuse. I still should have got that. But three-way moves. Let's look at these three-way moves in a bit more detail, because if you have got a daily chart that's struggling, this is a good one for stocks, and even looking at this in a 6-minute chart for stocks would work well as well. Let me give you an example. You have that example there. That's the funnel pattern, which is even stronger. Let's look at another instrument. What I might do is just call up my chart library. Let's have a look. That was the Euro Yen. Let's look at Pound Aussie. Let's look at a bullish three-way move. Here, yeah, already marked up. All those lows down there on the 5th, 9th and 10th led to an almighty breakout up into, you know, key daily fib levels. So it created a box and a wedge, and you know, it's common to get retests in a box like that. It's very common for this to dip into the box before it's ready to go. The other thing to note is how that 200 EMA is waving up. So while I've got this chart up, let me just look at this. This is very toppy in the daily now. That's a head and shoulders up there. That's looking very much like a head and shoulders. Shoulder, head, shoulder. So if that pulls back to, let's see, I would still be interested on the short side on this one. If that comes and retests 205, because we're between the 50 and the 200 now. And that's leaving us with a sell signal. New high in the run, close below next day, that's a sell signal. We've also got, what else, you guys tell me what else you can see on that chart that might be give us an indication that one's had it. Any suggestions? While you're thinking about that, I'm just going to just pull this over here a second. Yeah, that's what I was trying to get from you guys. Yeah, I was trying to get you to talk to me about this divergence. Yeah. Yeah, that is clearly struggling up there. I tell you what though, I would be very interested in 200. With a little bit unknown territory at the moment. I don't. Effectively, you are short. To my way of thinking, you're shorting gold if you are buying the pound versus the dollar, because the Aussie dollar is so influenced by gold. So I'm just going to just let this week unfold and see what they want to do with gold, because I'm just concerned that, as far as this chart's concerned, that they might pick gold up and run with it, and we'll come on to that in a minute. So that was hitting resistance at between 3 and 4 o'clock Q time. Excuse me. Let's take a sip of water, hang on. So I'm going to alarm that level. We've got a lot of pound data tomorrow, haven't we? Yeah, actually, I've just noticed something else as well. Coming back to this daily chart, just notice how this is pushing higher, and we're getting lower highs on this MACD. If you pinch it up, it's much more obvious. But I would suggest that is needing a pullback to 200, at which point I would get very interested. It's a little bit similar to this range here, with a decent push up, the pull back, caught a bid, and wow, look at that support. How about that for a three-wave move? 1, 2, 3, and go. Nice chart pattern. I mean, the bigger the time frame where you see divergence, the bigger the potential. Sometimes these divergences just bring about pullbacks rather than reversals. But we've certainly got, well, the market seems to think we're beyond ourselves up there, and that is what has been pulling back. Let me just take all that off. But I'm a big fan of just, you know, I use fibs all the time, but sometimes you just need to strip your charts away and just see what they're actually doing with it. Right, where are we now? What else do I need to look at? Let's look at this Aussie CAD. I was in this a couple of days too early. Very frustrating. I thought I had got a good price on this one. All this turmoil's dragged it down. I was trading this. Where was I trading this? Must have been early last week. I was picking up 95 to see if I can break out of break above 96, and they dragged it down to just under 94 and bought it. So I was a couple of days ahead of that, which is a shame. That's actually now, that hammer is Fridays, but is the weekend bar, Sunday bar. That is now a good place for a long. So I'm actually going to alarm that and bid on that tomorrow. I think that because if that starts the motor, I think that's going to be extremely good. On the theme of divergence again, note how we've got divergence here, because we have made a new low on it. Sunday doesn't really count to me, but if you're cheeky and include Sunday, you have actually got a lower low there. I like it. It's got potential. It's certainly a 96, 97 is going to be tough to get through. Jumped up to the weekly. So we're just pulling back into a heck of a lot of resistance, aren't we? I would risk a small position on a retest of Sunday's open level. I certainly wouldn't get too involved with that at the moment, unless I saw some nice closes above this 95.50. So I think that's it for Forex. Let's look at gold and oil. Let's move on a little bit quicker. The theme tonight is three-way moves, so let's just have a quick, and then we'll talk about bigger picture potential for the week. Bear in mind we've got, you know, quite an unusual week. Three-way move. This is, yeah, because this is a low volume market, it's not quite as good. Right, let's look at oil's not going to give me the same. So I think that, we didn't talk about the daily on gold. I think the jury's out. This oil is really struggling. Why has it done that? Come on. Right, let me try and sort that out. What's happened? What have I done? What have I done? Bear with me a minute. I have to hang on. I have to sort this out manually. Let me just come out. thought it might do that. Bear with me. It won't be long. Let me pause this recording.